Hello, hello, everybody. Welcome to the Crypto Cowboy Show. Today, we're going to do a lot of different news. We're going to cover the news in the last couple of weeks and leading up maybe into next week on the crypto and the market. So let's get going. My name is Jay Scott, aka Crypto Cowboy. I'm the founder of Freedom Life 3.0, where we help people take their freedom back by investing in alternative assets that can really beat inflation and money debasement so you can have your financial freedom. So let's get going here. All right. So first stories we're going to cover here is, so these Bitcoin ATMs, have you ever heard of them or ever seen them? You've seen them around sometimes in gas stations or whatever. Well, they've been being hacked a lot lately, and apparently they're quite dangerous now, and it makes sense. So 74% of cryptocurrency ATMs are globally managed by just 10 operators, and if they don't take their security very seriously, they really can be a problem. And it makes sense. I mean, we've all seen these here, right? We've seen these ATMs, and but they say Bitcoin on them, and you can put your wallet numbers in there, and you can buy and trade Bitcoin, basically. I've actually never used one. I don't know if you have. Put your comment in here if you've used one, what you think about them. But here's something interesting. It's like, hackers can't really hack an ATM the same way they can Bitcoin, because ATMs aren't transferring necessarily your crypto keys or codes. They might be transferring pins or something. But what happens is hackers can get in there and they can install malware on these machines to capture your private keys, or which they then could steal your funds, or they could manipulate transactions. And so again, if these communication devices aren't set up to be really robust, attackers can get in there. And they're in a lot of these gas stations. I don't know how well they are protected and secured. So it's interesting. It says, ironically, ATM's risks are directly related to the strengths of Bitcoin, which is that Bitcoin is decentralized, it's permissionless, and it's immutable, which means that once a transaction is sent through the network, if you sent it to the wrong address, or if it's captured, there's no way you can get it back. I mean, this is a decentralized system. There's no organization that is running it. There's no 800 help desk that you can call if that transaction gets sent into the ether or it never happens because somebody captured it. Then there's nothing you can do about it. So that's really good because it is safe and secure in the network as long as someone hasn't captured your keys before it actually gets into the network. So this is what I want to make clear, is that the Bitcoin network itself, once transactions are in the network, they're completely secure. No one can steal it. The network has never gone down. The only way they can is if they capture your wallet or steal your keys. And in this case, if you're putting malware on that machine and it's just sitting in a gas station, so it seems to me it might be a little easier to do than somewhere else, they can capture your keys before you even send it into the network. It's the same thing with using a hot wallet on your computer. If you had malware on your computer or a keylogger and you actually were to type in your crypto keys, it's just stealing those codes because it's not even getting to the wallet or getting to the network, and they've stole that. So that's why a cold wallet, which is not connected to the internet, is the safest way to transact in your crypto. All right, so let's move on to the next story. Now, this is another interesting little off-topic normally story. In North Texas, this community says that this crypto mining facility is bringing a never-ending noise, and it's declining in their health. Okay, they're noisy. I don't know if you've ever seen or heard of these, but a rural Hood County community claims that a crypto mining facility replaced the peaceful quiet in the area with constant noise. Okay, that sucks, and I get it. But they say that it's affecting their health, and I'm trying to figure out why. How could noise affect their health? Well, it turns out that they say this is not just an annoyance, but having this constant noise is affecting their health. And according to one health official, they said being frustrated 24/7, being upset about something you can't control is damaging to your health. and it will destroy your health if you can't get a good night's sleep. Well, I agree with that, right? I think stress is the number one reason why most of us are unhealthy and have diseases. I'll go so far as to say cancers are caused by a lot of stress, uncontrollable stress. And I get that. But there's really, what's the difference between this and then, moving in next to a waste dump or a petroleum field, or, what do they call those? Petroleum oil manufacturing companies. I feel like this article did not talk about the uniqueness of this situation, or excuse me, the non-uniqueness, meaning people live near hazardous, stressful places all the time. And they're now making a big deal of like Bitcoin mining because it's noisy. Yeah, so I'm not buying this. I mean, their children having cochlear implants placed because they're now hard of hearing. Really, it's not that loud. It's not like firecrackers. I mean, it's loud. And if you're right next to it or across the street from it, I get it. It's annoying. It's a pain in the butt. But to say that you want some sort of help or whatever, I mean, you moved there, or you were living in an area and they moved in. This happens all over the place. This is not unique. So although I get it, it's stressful, and they probably would have a hard time selling, they're going to have to. Because I agree that constant noise is a pain in the ass. And if you can't sleep, you're not going to be healthy. But there's a million things out there that could cause this. And Bitcoin mining, isn't really this unique thing. It's kind of, here they say Texans are not gambling in and benefiting from Bitcoin cryptocurrency, so we shouldn't have to put up with this. No, I don't buy that. I mean, everybody can benefit from cryptocurrency, whether you're buying or selling it or not. One of the things is that these crypto mines, especially in Texas, where some of them are connected into the grid, nobody talks about this, but the fact that I don't know if you know much about electrical grids, but the way that they work is that depending on demand, they can spin up or spin down certain types of electric generation, right? So nuclear, the problem with that is it's on constantly. You can't turn down or turn off nuclear. But you can turn off coal, but even then it takes some time. Wind, you can turn off pretty quickly. And I believe solar, you can turn off pretty quickly. The problem is wind and solar cost a lot to implement. But they're really good at being able to turn off the consumption of that so that more power can go to more people in either real hot temperatures or real cold temperatures. The thing with a crypto mine is that you can instantly shut it off. And so during times where they need a lot of energy, they can shut down the crypto mining, provide more energy to the grid that needs it. But in the time where there's this average electrical demand, it's not really good for grids to have so much capacity that's unused. You want capacity that's constantly being used because that's the most cost efficient. And so what these Bitcoin mines does is most of the time when they're up and running, they provide a constant flow of energy. Now here they're saying here that the Bitcoin mining is a huge consumer of electricity that demands and drives up energy costs for everybody. I don't buy that. It's not driving up the cost. It's actually evening out the consumption of electricity. So here's the thing. Marathon Digital says they're voluntarily enhancing and expanding sound walls that surround part of the site. They don't have to do that because they had this all tested, and according to they had acoustic experts come in, and according to the county and to the state, they're within the sound noise limits. So they're not breaking the law, but they still want to be, conscious of this. They're also trying to find new ways to cool the equipment, because what happens is the equipment gets really, really hot. So they have these huge fans, just rows and rows of them, and that's what caused the noise because the fans keep the machinery quiet. Well, there's this new liquid immersion cooling where you can actually immerse the Bitcoin mining rigs into this cooling water or liquid, and that keeps them cool. It's much less noisy. Again, that costs more. This is a business. they're running a business and they're not doing anything illegal. So yeah, this happens. We see this. I just think this again is sort of piling on to Bitcoin mining because it's sort of an easy target, to tag on to. The thing is that Bitcoin miners know that they do consume a lot of electricity, and they get it, and they are always trying to find more green, more efficient methods of using electricity, because if they use too much, or they truly are becoming a hazard or a nuisance to the majority of the planet, they're not going to be in business anymore. So they're always constantly finding new ways, and they're finding greener ways. And if they can put one of their rigs next to a hydro plant or a solar or wind plant and tap right into that, if it's cost effective, they'll do that. They know they need to maintain the greenest possible energy they can. Of course, they are still a business and they have to make money. And so we'll see. I'll tell you the truth, folks. AI, with its large language models, those data centers are taking up just as much energy, and they're popping up all over the place. I don't know what the ratio is, but my guess is that AI, those data centers are going to take over how many Bitcoin mining centers they are and how much energy they use. So it's not going away, folks. We need to figure this out. We need to find cleaner, more efficient energy, because as a society or across the world, we're consuming more energy. We're not going to go backwards. So, all right. So let's see. Next one. All right. So we're going to get into a little bit of the news here. So let's find out what we got here. So it's interesting. We see that this is the Milk Road Fear and Greed Index. And so it's extreme fear at 26. Now, I think there's another chart I'm going to show you here in a minute where it's 41, the fear and greed. But of course, when people are in fear, that's the time to be buying. That means that the herd is not buying, they're selling. That's when smart investors want to be buying crypto and Bitcoin. So Bitcoin has been down. It's been down in its lows. It's been down around in the 50s after reaching up 70 earlier this year. So people are freaking out. But you and I know that as smart, savvy investors, because we believe in Bitcoin, we know it's going to be going up. We know by the end of the year, it's probably still going to hit 100,000 or close to that. And the demand in the future is never looking better. That this is on sale. When Bitcoin gets down to these prices, it's on sale. So I think that's important to note. So this is a chart that talks about the divergence of the S&P 500. Let me see here. See if I can make this a little bigger. Oops, we've got to go back over here. All right, it's a little bigger. So we've got the S&P 500 in blue. We've got Bitcoin in red. And you can see that right in here, this was the July timeframe. You can see, S&P 500 was going up. Bitcoin is going down. So there was a definite diversion there, divergent. Things have been kind of going the same. Typically when the stock market is down, Bitcoin is down. Goes back up, Bitcoin went back up, S&P is down, and Bitcoin is down. But they are decoupled a little bit. Stocks are not doing good right now, and Bitcoin is not doing good either. So what does that mean? Well, mostly it means that people that I love Milk Road, the frumpy old uncle loves traditional assets, indexes like the S&P 500 because they're lower risk. So retail and also institutional are still loving traditional assets. And if you're a follower of this channel, you know that we are big followers and proponents of risk assets, because it's the only assets that can beat inflation and money debasement of between 12 and 14%. S&P 500 doesn't beat 14% of inflation and money debasement. But the market's appetite has been waning, means that they're not going into high-tech stocks as much anymore. They're not going to crypto. But that's going to change. And why? Because of money's coming in, rate cuts and quantitative easing. We're going to talk about that in a few different slides here. Quantitative easing is coming. Once they start cutting rates, they're going to start injecting more money into the system, into the banking system. It's going to start liquidity is going to start to rise globally. And that's what fuels high-risk assets. And so assets go up when inflation and money printing go up, and that's coming big time, folks. So if you can just hang in there. We're looking at a 2025 that for risky assets, I think it's going to be a really good year. So I like these little memes that they have here. So rate cutting in QE. Let's get that. Yeah, it's coming. We're going to get to the banana zone. You guys know what the banana zone is. Raoul Pal of Real Vision basically said when the market's just going crazy and it's going up and everything else is down or just going sideways, Bitcoin's going to go into the banana zone, and it's really funny. So I actually just bought a shirt to talk about the banana zone and a hat. So when you see my banana zone hat on, it's like we're in good shape. We're looking good. So yeah, so soon as rate cuts happen, we're gonna hit the banana zone. I think there's another one in here. Let's see. They have some pretty cool memes coming up. Come on in here. Yeah, this one. My next 3 months are going to be better than the last 9 months combined. Q4 is very bullish, but look at this dude. I love this meme guy. And then this one, it's like, I have no more money to lose. Let's see. Yeah. When your portfolio hits zero and you have no more money to lose, find the inner peace. Hopefully that's not the case. Hopefully you guys are still hanging in there because good times are a-coming. All right. So this talks a little bit about rate cuts. So first they talked about, this is on prosperity, get up here, peak prosperity. And from this site, Chris Martenson, he's talking with Paul Kiker, and they were basically talking about the oil and how oil seems to be going down. It's like, what's going on? And they think it might be for political reasons, or it could be that recession is coming and they're going to manipulate this. And the scary thing is if we get an oil crisis, a crunch, and prices go, way down, then we could be in like a 70s type recession, which that wasn't really fun. I was around. I wasn't really in the economy at that point, but yeah, I don't want it to get there. So also talks about cash being put into the system, so QE once we get liquidity. And what happens typically, though, is when the Fed reduces rates, the market goes down a little bit because basically like, oh, things have been broken. If the Fed's finally cutting rates, things must be really bad, and the market doesn't like that. But again, it's going to start flooding in QE. It's the beginning of much more liquidity coming into the system. So I think the markets will certainly rebound. And one of the things that they pointed out that was interesting is that, quantitative easing was meant for the Federal Reserve to loan money into banks, and then banks are supposed to loan money, to the economy and to businesses. And that is supposed to perk up the economy, right? It kind of makes sense. That's the way it's happened in the past. The problem is because interest rates have just been monkeyed with for so much. They were down to zero for way too long, and then the Fed came in and raised them really high. They've been doing this liquidity injection for years now, and the system just isn't as efficient. So what happens is that they do put more money into the banking system, but it doesn't go into people's hands. Like they said here, it's sloppier. The transmission mechanism is less coupled to the economy. And that's too bad because what is the Fed going to do? And all this money they're putting into the economy, everybody's saying, oh, this is going to be great. This is going to be great. And then you don't see Main Street or even Wall Street economy moving up because that money isn't efficient. It's out there, but it's not being used. So they need to figure out a better and efficient way to do that. So we'll see what happens this time around when the Fed starts pushing in liquidity, if it's actually going to boost the economy, which it should. So they're back to when QE begins again, it's time to go all in on risk assets. Like I've been saying, I'm a big proponent of you need to be in risk assets all the time. You need to ride down the low times because they can go down, but the risky assets are the ones that will beat inflation when they're moving up. And we're in this QE for a long run. The Fed is going to be injecting into the economy which is basically money printing, right? Which devalues the dollar, which means the dollars go down, but assets go up because your dollar doesn't purchase as much. So assets are rising. So you've got to be in assets, and the largest rising asset is Bitcoin and other cryptos when the Fed is injecting a lot of liquidity. Real estate goes up too. It's going to have its days of up and down, but you've got to stay in the market and you've got to be in these riskier assets, which I don't even think they're risky anymore, because the risk of not being in these assets, meaning you're losing 12 to 14%, in some cases 19% when inflation was like at 9%, because no traditional investments, the S&P 500, the stock market, anything certainly in cash, savings accounts, money markets, CDs, those are horrible places to put your money unless you're secure and you've got the majority of your money in good paying assets and you want to just have a safe haven of 6 to 9 months of cash that you need on hand, then put it into the money market or a CD. But anything that you want to sustain yourself for savings or retirement has to be in these higher assets. Again, people sometimes complain. It's like, whoa, I don't, what if I don't have time? If I'm, I only have 5 years left before I have to retire. Depending, if you've got your retirement all socked in and it's ready to go, and you've got your couple million of dollars that you're going to live off for the rest of your life, then you're probably good to go. But if you haven't, if you're trying to catch up and you're in your 40s, 50s, and 60s, you got to be in these higher assets because you don't have time to use that compound interest at 1, 2, 3, 4, 5%. You've got to be in these higher percentage assets to catch up. So, yeah, if you're in your 20s and 30s, yeah, get in your 401k, get in your IRA, go into a low fee index fund where you can then earn your 5 to 7% over 30, 40 years. That's a great way too. But if you don't have that kind of time frame and you haven't been in these long-term assets that are earning an average price, you need to be in these higher assets. You need to be in crypto. You need to be in real estate. Gold is a good place to be into because at least it stays even. So that's my spiel for this channel. It's what we talk about all the time. All right, what else are we gonna do here? Oh yeah, so let's take a look at looking at the banter bubbles, which are gonna tell us what crypto's doing. So today it's looking good. Look at all the green. So Bitcoin's looking good. We've got Doge. Look at all these big bubbles. Tau, that's one of my favorite AI plays. Yeah, we're doing good. But when you switch it over to the week, ooh, it's not looking so good. And when you switch it over to the month, it's a lot more red. But it's been a bad month for crypto, and we get it. But we know it's going to come back. And look at today. It's not looking too bad. Not looking too bad. All right, let's get back here. Oops. So these guys say fear and greed is at 41, which is still kind of, below neutral. So people are still a little on edge about things. So I think it's still a good time to buy into crypto because we've got a long way to go still. This is an interesting chart I wanted to show here. I think it's on here. So what we're seeing here is October, November, and December. We're down this year. And yeah, it's been kind of, ugly in August and September for sure. And look at the past year. So here is 2024 on this top line, not so good. Last year, August, not so good. September, not too bad. Look here in 2020. These are all years that they were injecting liquidity into the market. And look at this, boom, up October, November, December. Down here, 2016, boom, October, November, and December. So point is, I think October, November, and December are going to be really good months. This is the time to definitely get into the market, get into the crypto market. Definitely be buying Bitcoin because it's going to be a good month. Because I don't know if it's going to hit 100,000. I still think it will, but it's going to be close. It's going to be close. So here's a little bit about the ETF funds. So you can see that ETFs, people are buying these ETF funds in Bitcoin. The price is fluctuating, going up and down in the blue here, but ETF funds are flowing. And of course, when they're going up, Bitcoin is up. And when the flows are down, Bitcoin is down. So we can see that the flows are down here a little bit. Bitcoin is down. But again, I think retail is going to start getting in. I think, the Bitcoin halving, happened in April. And it takes months for that to take effect, and we still got that coming too. Plus, we got all the QE coming in, so I think it's fine. I'm buying Bitcoin right now. I think this is a time you need to be in the market and buy. All right, I think that's it. No, we got one more. We got one more article today, and this is about the Tesla universe. So I don't know. I'm a big fan of Tesla. I think Tesla, the key thing about Tesla is not a car company. It's a AI company. And Wall Street hasn't figured that out yet. So we've got Optimus robots. They're going to be a big player, I believe, in these in a couple of years. There's going to be these robots walking around doing a lot of the things that we don't like to do, like mowing the lawn, folding the laundry. You got full self-driving. That's like available now in these Teslas. That's an AI play. They're really working on batteries. They're looking to be a major player in battery technology. Of course, he owns X, Neuralink. Who knows where that's going to go? But interfacing humans with machines. XAI, he probably, I wouldn't put it past him to be the biggest AI company. They've already got the biggest AI large language model database lab or system out there. The Boring Company, they make huge tunnels that bore and under cities for transportation. And of course, SpaceX. I mean, the dude is a killer in SpaceX. They're going to go save Boeing with those poor astronauts up in space shuttle that can't get down. SpaceX is going to go there. So I'm betting on Tesla. I hope you guys are too. Right now, the stock is, kind of languishing. But man, I really think in 5 years, Tesla's going to be where it's at. All right. So everybody, thank you for joining, and stay in there, hang in there. Bitcoin is lagging now, and probably your altcoins aren't looking great, but hang in there. Liquidity's coming. The Fed's going to cut rates next week, and soon after that, they're going to start injecting more and more liquidity into the system. Asset prices are going to go up. Bitcoin's going to go up the most, like it usually does, and it will pull up the other altcoins with it. So awesome. We'll see you next week.